This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning. We are coming to you as always from the CNBC TV 18 Motilal Oswal studios. Markets yesterday gave a bit of a flourish of an open, but it was a dampener of a close. That's the big question. What is on the market's mind? What is worrying it at the margin? We'll talk about some of that stuff here over the next 2.5 hours. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, good morning.
Hi, good morning. And of course, there's been, 2 days of FI selling in the market. So I think maybe because we are getting closer to election dates, closer to the final outcome, maybe the market could see a little bit of volatility. But you never know. The uptrend has been pretty intact.
Well, that's right. In April, we were outperformers. Yeah. But in the month of May, it appears we're relatively underperforming the globe. So let's get straight to the action, Prashant.
Absolutely. And I think, the action from the global market is once again, like what we said yesterday, positive. I mean, there is no problem. It's not a global kind of factor. And many of you would be wondering, what is going on? Why is the market here not responding to lower dollar, lower yields, equities up, etc., etc.? And we'll get to that in just a bit. But, yesterday was a disappointing close after a good start. And this, even as global market backdrop, was very positive from last Friday after that jobs data. Once again, as I said, you got positive cues. NASDAQ was up about 1.2% or so. Yields and dollar are flat. Yields at about 4.5% on the 10-year. And you got the dollar index, which is steady, holding steady at about 105 odd level or so. Oil prices are slightly above the $83 per barrel mark. So nothing there as well. There were some headlines through the course of the last evening, which basically suggested that in the Middle East, that conflict between Israel and Hamas, that perhaps could see some resolution. Hamas proposed a ceasefire, and the latest news is that Israel has rejected it, basically saying that, what Hamas is proposing is, and I quote, far from Israel's necessary demand. So that's not happening. And that offensive into Rafah, I think, is still very much on. So we'll hear more about that as we go along. Now I'll get to the elections here. So the third phase of polling, in which we will see 93 seats going to polls, will kick off today. It's going to be important. So two things markets are going to watch. One, of course, is turnout. From the first two phases, voter turnout has been low. Lower by about 3-4% compared to what we saw same time in 2019 for the same seats. And that is kind of worrying some people at the margin, that maybe people are not coming out for whatever reason to really exercise their vote, exercise their franchise. And that perhaps is not all that great news for the incumbent BJP. There is also this slow burn idea, and I think it is kind of, one can't quite sort of point to it, but there is this idea that maybe the case for the BJP for a massive victory, and of course, we heard that those slogans of 400 par, etc., that maybe it's not such a clear-cut case, in line, and this is in contrast to what the opinion polls, etc., had shown us. So I think, it's something which is on the market's mind when you speak with people on the record, off the record. This is something which many are pointing to. And I think because we will not know for another almost 1 month or so, till early June is when the results will be out. I think, you'll be perhaps in that state of uncertainty, etc., the election uncertainty. Is it going to be as thumping as the opinion poll suggested, or perhaps a little lower than that? I think that is the worry, which I think market perhaps is trying to price in and not really get very excited on the upside. I think that's how it's trying to price in and not react in full flow with what we are seeing around the world. Now, just to sort of take you through where the levels are, we closed marginally below the 20-day moving average, which is 22,454. We left off at 22,443. So it's right around there. That becomes the first pivot in that sense, the 20-day. Yesterday was an inside bar pattern, which means that we spent yesterday's session high to low inside the previous day's high to low. So, and this is true not just for the Nifty, for the Bank Nifty as well. So naturally, beyond the 20-day on the downside, Friday's low, which is 22,348, will be the other point, the other level to watch out for. And then below that, you get to other moving averages like the 40-day exponential, which is 22,311. Hopefully, we'll not sort of see those levels anytime soon. Bank Nifty, as I said, also had an inside day pattern. Here, on the way down, the 20-day moving average stands at 48,398. This is the first pivot which the market will watch out for. And then, because it was an inside bar, Friday's low, which is 48,660, should not break if any weakness starts to creep in. The GIFT Nifty will come up on your screens. And it'll give you an indication how we like to start. This is better, I guess, with you get a 100-point kind of a flourish and you expect the market to build on it, and then you had a whimper of a close like we saw yesterday. That is a bit more disappointing. This is all right with a 40-odd point higher start. Sonia.
I think we got that support from the global cues, right, this morning, and that's why there's a little bit of an uplift in the market. So global cues have been strong, no two ways about that, and that's really what's buttressing the market in the last few days. If you look at it, the Dow has been up for 4 straight days now, and yesterday as well, the Dow was up almost about 180 odd points. Now, coming to the Nifty, it has been facing resistance for a while now. The last couple of days, the Nifty has hit that 22,600, 22,700 mark and come off from there quite a bit. There has been 2 days of relentless FI selling. So yesterday, FI sold about 2,168 crores. And in the month of May alone, so far, FIs have sold almost 5,600 crores. So what is troubling the market? Now, as we've been saying, right, there could be some volatility as the market gets closer to the counting date. The counting is scheduled for the 4th of June. So we are a month away, less than a month away, actually. So maybe we could see some trepidation. There's a crucial phase 3 of the Lok Sabha elections that has begun today. You have images of Prime Minister Narendra Modi, Amit Shah going for voting. So, as we enter the last phase, you could perhaps see some volatility in the market. Having said that, there are plenty of stocks to watch out for. So let me get to that very quickly. Marico, actually, FMCG might come back over the next couple of weeks, given the kind of solid numbers that we've seen from management. Marico, not only the numbers, but the outlook from the management was quite good, actually, compared to what we've seen in the preceding quarters. Godrej Consumer saw a domestic volume growth of 7%, consolidated volume growth of 12%. So, some of these FMCG stocks are coming back, which is a good thing. Hindalco, there were good numbers from Novelis, so that could be on the upside today. Lupin actually missed estimates, so maybe you could see Lupin move to the back burner today. And in terms of results to watch out for, there's Dr. Reddy's, Voltas, United Breweries, so lots of companies coming out with their earnings. But I guess, even the India VIX, by the way, has hit that 1-year high. So I guess some volatility cannot be ruled out until we head into the crucial election counting day. But up until then, today looks like the start is going to be mildly in the green.
Well, that's right. And sustaining those high levels will be important. Yesterday was actually an anticlimax. It was a disappointing trading session because we had all the factors in place to see a good bounce in yesterday's trading session, and that didn't happen. So the Nifty couldn't sustain at high levels. And in the last few days, if we just pull it up, you'll see when we go to 22,700, 22,750, we're unable to sustain at those levels, and that's why we're coming off the top. The India VIX, that's moved from a 52-week low to a 52-week high. I'll tell you what, getting into an election, into the election verdict, you're expecting the volatility index to continue to remain at elevated levels. The IVs on both sides are moving up. So one strategy could be, if you're an options trader, what you could be looking to do is writing the near-term strike and buying the same strike in the next series, because the IVs in the near term are very, very high. So if you want to eat that premium, a bit of a risky strategy as well, but that could be one of the strategies in place. The short point is, the India VIX at elevated levels, it's okay unless it gets past the 26, 27 odd mark. That's what the market feedback is. What did the FIs do yesterday? They added close to 7 longs for every 1 short position. They remain net short with 55% of their positions on the short side. And in absolute terms, it came down from upwards of 45,000 contracts. The net short positions are holding at around 35,000 contracts, although they continue to remain net short. What about the options data? I was telling you that the call writing is getting aggressive because the bears believe they've got this covered. They believe the 22,700, 22,750 level, that's not a level that we're likely to breach on the upside. So let's get to the levels. I'll give you a broad range. On the downside, 22,200. On the upside, 22,800. If we breach either of these levels, I'm expecting a 500 points move from here and a 500 points move from here. That's on the downside and that's on the upside. So broadly, if we breach this range, then you're looking for a 500-point swing. Reference points come up for you on the screen, which is the 50 as well as the 100 DMA. The Nifty Bank, that as well is seeing selling pressure at higher levels. And the broad numbers that I'm looking at is resistance comes in at around this 49,500 to 50,000. And the 20 DMA becomes very, very important. Going by the volatility index, I'm expecting very, very sharp moves on either side with regard to the Nifty as well as the Nifty Bank. So keep that in mind. The stock in focus today that I'm looking at is Piramal Pharma. Before we get to the stock in focus, today we'll keep an eye on the Nifty Financial Services Index because it has weekly expiry that plays out. And another one is, SAIL, that's moved into the F&O band. So we'll keep an eye on both these two factors as well. The stock that I'm looking at is Piramal Pharma, because yesterday, it was strong in an otherwise weak market. It's taken out the 20 DMA, which is at around 142 rupees. So you'll keep an eye out. Remember, if you look at the longer term chart of the stock, it's been a big underperformer. But volumes were massive in the last two sessions, and the chart will tell you that picture. And in fact, on these large volumes, it appears that selling is getting absorbed. So I'll keep an eye out on this stock. It's a rank underperformer, mind you, in the last few years. Last few sessions, it's been an outperformer. I think that one should be on your radar.
Okay, thanks a lot for that. Very helpful. There are lots of stocks to watch out for. But on the equities front, we have a comment coming in from Venugopal Gare of Bernstein, who says that while earnings should be healthy relative to the past decade's trend line, they estimate a peaking of earnings momentum, signs of which are already visible. As they did not detect much confidence in a growth surge this fiscal, he says the broad takeaway from firms, whether they had a good FY24 or not, was an FY25 with moderate growth. He says they retain their call for high single-digit returns for the Nifty this year.
Gautam Dugar of Motilal Oswal Financial Services adds that corporate earnings scorecard for the fourth quarter have been in line with the heavyweights such as HDFC Bank, Coal India, ICICI Bank, Maruti and TCS driving the aggregate. He says earnings spread has been decent with 70% of their coverage universe either meeting or exceeding profit expectations. However, he adds growth has primarily been led by BFSI and automobile sectors. The Nifty is trading at 12-month forward of 19.3x at a 5% discount to its long period average. He goes on to say they remain overweight in financials, consumption, industrials and real estate. Gautam adds industrials, consumer discretionary, real estate and PSU banks are their key preferred investment themes.
Okay, let's also talk about the money markets, right, and tell you what's happening there. Abhishek Goenka of India FX and Asset Management says the recent US data has missed expectations and this has resulted in the markets again bringing forward expectations of a rate cut by the Fed. He says the probability of seeing at least 225 basis points rate cut in 2024 has risen to 66% from 41% last week. He adds the US yields have come off from their highs and the dollar has weakened. The rupee has not strengthened in line with peers amidst dollar weakness. He expects low volatility to continue in the dollar INR and expects it to trade in a range of 82.70 to 83.70 over the medium term.
Vishal Goenka weighs in on bonds. He says that bond yields have rallied post the FOMC slightly dovish comments last week, weak employment numbers in the US and oil prices coming off. With the possibility of ceasefire in the long-drawn West Asia conflict, he says government security yields on government securities have rallied 10 to 12 basis points in the last few days. Important CPI data new next week will be watched. He expects the 10-year here to trade between 7.07 to 7.12% and for it to go lower next week.
Well, we've got a lot of stock-specific action track for you in our special Top 10 segment. For the time being, we run it through the list, and later on, we get into further detail. Let's run it through the list. Hindalco, Godrej Consumer Products, Happiest Minds, Marico, Fusion Microfinance, all of them will be reacting to positive news flow. Add to the list, Gujarat Fluorochemicals. While on the flip side, stocks that could be reacting to negative news flow are Lupin, Gujarat Gas, DCM Shriram, and Route Mobile.